Hello everyone, it's Ben, also known as Profit. That's Profit. And I hope that's my new nickname. However, today I want to talk to you about some incredible investment opportunity that I believe could change our financial future. If you're watching this video, I'm going to ask you to watch the next videos, maybe 2 or 3 of them. It gives you a chance to explore the exciting projects that we have, highlighting the vast potential in a real estate market of an emerging region. The opportunities here are boundless, driven by unique characteristics that define what an emerging market is. Now, emerging markets are often characterized by rapid economic growth. I want y'all to listen to me. Developing infrastructure and increasing industrialization. These markets typically experience rising consumer demand and have a young, dynamic population. Investors are attracted to emerging markets due to their high potential returns. As sophisticated investors, although, we understand that investment choices cannot be based solely on the appeal of an idea. It's about the people behind those ideas, the individuals entrusted with our managing of our funds. They must be responsible, they must be disciplined, well educated, and experienced. So, humbly speaking, we're not asking for your money today. Let's be clear. What we are offering is a chance to invest in remarkable opportunities at a fraction of their true value, especially for angel investors. And those are my family and friends. I'm excited to share that I've discovered a hidden gem in Central America. Now it's time for us to rally together as family and friends and see this incredible financial opportunity. The opportunity lies in the Republic of Panama, a vibrant city buzzing with energy and a flair reminiscent of Miami. The governmental landscape is fair, the corporate structure mirrors that of many European nations, and the population is on the rise. So what does it mean for us? The way we generate wealth is by acquiring distressed properties and renovating them. Currently, these projects can yield astonishing returns, with yields reaching higher than 100% returns that are quite extraordinary. For example, if you purchase a property for $100,000, invest an additional $100,000 in renovation, our total investment would be $200,000. Upon completion, we can expect the property's value to appraise easily upwards of $500,000 in today's booming market here in the Republic of Panama. And by leveraging the investment, we can quickly secure a first mortgage, access up to 80% of the property's value through refinancing, which would give us a capital of $400,000 that we can invest continually over the next 3 years. And at the end of that, we can easily anticipate splitting the returns, projecting a collective net worth of around $10 million. I said it. In 3 years, we'll be easily looking at $5 to $10 million, easily. And remember, our ambitions aren't confined solely to real estate. Now let's look at this simple example before we go. The initial investment stage, or the initial stage, works like compounding interest. It's called compounding profit or compounding revenues. Compounding interest is the interest calculated on the initial principal as well as on the accumulated interest from previous periods. This concept allows investments to grow at a faster rate compared to simple interest, which only calculates interest on the principal amount. Compounding can occur annually, semi-annually, quarterly, or monthly, and more frequently interest is compounded the greater the total return. It's a powerful financial principle, often summed up by these phrases: the sooner you start saving, the more the money grows. Here we'll use the word retaining. Retaining is a powerful word in business. The sooner we start retaining our earnings, the more your money can grow. And for those of us who've ran the world, returning is no other than re-up, as some of you may understand that phrase. However, if you don't, you just don't. Anyway, angel round, or our first phase, is simple. We start with our investment of the $200,000. We're going to service the deal, so I'll be asking for $30,000 on top of that, which is roughly 3% of anybody's money, small amount. Total, we're looking at $230,000 seed capital. Now, being sold is 100 par stock, 100,000 common stock, par common stock that is, of shares being sold at a fixed rate with equal voting rights. Now we have investment partners, it's us the founders and it's the investors. Together that's the 100,000 par stock. 51% goes to us and 49% goes to the investors. We're all us, unfortunately or fortunately, we're all us. Stocks and share par price. You're looking at $4.70 per stock. Okay, minimum investment, unfortunately, is 213 stocks at a time, which means your minimum investment is going to be around $1,000. It's $1,001, but let's say $1,000 is your minimum investment. Okay, and that's for family and friends. I need you guys to participate. I need you to get your $1,000 up. You have 2 to 3 months. We have to do it, and we have to do it now. Time is waiting. I don't want to miss no one. I think it's important that we all ride this ride together. Here we have a chart that shows founders and investors. Founders is 1% over the investor. Details. First 6 months, we're quickly going to purchase the property for $100,000. We're going to renovate the property for another $100,000. We're looking at $200,000 all in. Upon completion, we're looking at a new market value at least $450,000. Now that's low end. The reason why I say that's low end is because we're actually taking property, dilapidated or distressed property, and we're making new properties. And we're not just keeping homes per se. We buy land with a home on it. We're buying the land and utilizing and placing a building on it. Okay, and then we're going to place a sophisticated building. And the price of building here is quite inexpensive. It's a blessing to be in this situation at this time. Quickly, the details. We have increased the assets by over 100% to $450,000, an additional $250,000 on top of our initial investment of $200,000. And then we leveraged the asset by refinancing the property, giving it its first mortgage of $250,000, which will be paid back by the renter. The renter's paying this back. The renter's going to pay it back because the renter's paying market value rent, which would pay the loan and put a couple $100 in our pockets for soon needed repairs. Now we take the $250,000, leaving an equity of $200,000 in the property. The property has a positive equity of $200,000, and we reinvested $200,000, holding $50,000. That's the $250,000. We hold $50,000 for contingencies, and we do it all over again. Next 6 months, same game. If we wanted a $100,000 purchase property, renovated for $100,000, total in $200,000, market value once we're done completed $450,000. In 1 year, we have taken $200,000 at the end of the year mortgages. We have 2 properties worth over $450,000 each. We're looking at nearly $900,000 easily in 1 year. And this is the slow process, mind you. If we have the opportunity to reinvest, I probably won't buy a $100,000 property anymore. I'm going to buy a $200 property, changing it into $600,000 or a $300,000 property. We're moving up. This is the name of the game. Normally it takes an average of 4 months. I've gave you the reno in 6 months. I'm short-ending it, just showing you the incredible potential that we have here. Average 4 months is the reno to complete a reno, and we also move towards bigger and greater property. So actually, this is the low-end spectrum, as I mentioned. We begin the new year with 2 outstanding mortgages equaling $400,000, with the renters paying the loan back to the bank, and the company's equity stake is easily $500,000. So let's look at it quickly. The investment is $230,000. We profited $270,000, giving us our equity stake of $500,000. Listen, 1 year, $500,000. Equity. We actually reached the $1 million mark in a sense. Second year, $1,500 to $2 million. Second year, Year 3, $5 million to $10 million. Year 3. I want you guys to understand that, especially for my angel investors, the $1,000 investors, which I need you to rally together. We got to do this, and we got to do it now. We got to do it together. Now, again, Your first year is going to be a tight year, so you double the 1,000, and it goes over 1,000 maybe proportionately. So you're looking at 2,200 the first year, but the second year is you're taking the 2,200, and now you're going to make that $7,500 in the second year. And this is incredible because we're taking that 7,500 and now it's going to be reinvested the third year, and you're looking at $25,000 from $1,000. You're looking at $25,000 from $1,000. I know it sounds incredible, but unfortunately it's real. I need you guys to muster up your $1,000 and get ready. We're about to make changes in our financial future. Let's join forces and embrace this opportunity together. Thank you for your time.